Right, 18th of February 2022. So we traded mainly the NQ today. We did some ES trading, and in fact, our ES traded trades that we took were the bad ones, which we took at the end of the day. Didn't need to take them, and we ended up losing money. And it was because nothing to do, nothing to do with analysis, but just you know taking stupid trades in ranges where we should not have been taking trades. It was basically around here, and they were trades without good stops, FOMO, the usual stuff. So I think the biggest challenge for me now with trading isn't the analysis. The analysis is fine. It's just controlling oneself and making sure one doesn't have FOMO. But I've been kind of been preparing. Today was a good day. I wasn't supposed to trade on a Friday, and I think that's the other thing because I wasn't fully settled or set up for Friday for today. I obviously took some bad trades today. As usual, I've written down my notes on my trades for today and sort of written out some certain things in here that um, could have kind of helped things out for the day. I also wrote out the possible areas where I could have taken trades and the reasons why some of those trades were good, like this was a bad trade, and I realized actually just selling closes is not really a good idea, especially when you're too far from the moving average in a bear trend. So that's something that I've learned, or should I say, I'm getting more comfortable with the whole idea of shorting by bear trends, but also really looking for what to short and where to short. Um, Sometimes you see the price coming in and you're thinking you're going to get a two-legged pullback, so maybe one more high at the moving average, so you're not really sure whether to take that short. But I realized that you can kind of tell sometimes um, if a short is a good short at the moving average. Um, so yeah, so let me just go through uh, the day, what I was anticipating. So prior to uh, yesterday, we had, as you can see, we're in a bear trend. Everything rejecting the moving average, and this is the Globex chart. This is the regular trading hours chart. Nice gap down, pullback. So this is like a spike pullback, and then all of a sudden now we now have a small pullback bear trend. I didn't trade this obviously, as I mentioned. I did most of my trading here in this region and tried to catch some over here and nearly lost money in the process. Again, I think what it is when you come back into the market and you want to take a trade, um, always and something I need to write. I'm probably going to write some post-its about this because it's my biggest trouble with trading these days. I seem to know so much in terms of analysis, but I'm not doing very well when it comes to sizing and setting stops and just dealing with losses because I've just made so many mistakes. It's affected my confidence whenever I have a loss. So for instance, now if I said I was going to sell this bar and let's say I actually look for one that I actually took. I think it was this one that I took, sell this bar, and then all of a sudden you see this. I can't remember what it was. Or was it this bar? Maybe it was this bar, and then this one's come up, and then you're thinking, okay, where am I going to put my stop? Really, you could put your stop here because this is the last breakout. It's not really a good stop because this is not really a range. It's just a pullback. Um, but you could put your stop here if you want to sell this bar, and you size accordingly. So if you're saying, well, um, I am only going to risk, say, I don't know, $50 or $100 here. You first will be comfortable risking $100, and then if you're selling this bar, this pullback here would pull back to about $50 because it's about 50%, and then you come back down. Now, what are you hoping or aiming for? Maybe one to one would be another $50 or $100 if that's what you're risking 100, another 100, or maybe a 2 to 1, in which case you get 200. Point being that you're comfortable with how you're trading this whole thing. And the problem I've been having is I would put in so much. I'll put maybe one NQ or two ESs. This will pull back, and as you can see, this is 4 points, right? 4 points is on two ESs is $400, and I'm not ready for that. And having not sort of considered how much I'm risking, now makes me have palpitations while I'm trading, and as a result, not really focused on really good trades. I actually find that whenever, so for instance, now this, I would have probably wanted to short here, but then seeing this come back up, I could obviously get out and short again. Um, with a tiny loss, maybe if I shorted here and then seeing this, maybe just, whatever my risk was, maybe it was 200 here, maybe just lose 100, and then come back and then, short again and make more money. So it's controlling that is the challenge right now, and it's something I'm certainly going to be working on. Um, but I always put pressure on myself to make lots of money, and in the process, I am losing money. Or well, it has been a problem. All right, so if we go into today, first of all, just kind of look at the analysis. We had, like I said, small pullback bull trend, which is basically a spike. It's like this on a higher time frame chart. So the actual day itself, this is the small pullback bull trend, and then we went sideways. No, what am I saying? This was 8 in the morning. The previous day, we just, oopsie. Okay, this was, am I looking at the right thing? Oh yeah, it's a 5-minute chart, so here we go. So this is a small pullback bull trend. So on the, here we go, I should just do this. I'm looking at the wrong chart. Let's pull this back here. So this was the small pullback bear trend, not bull trend, small pullback bear trend, which started around about there. We pulled back sideways and then we went down further. So you can see it's like a big massive spike, and this generally tends to lead to more legs down. All right. So we went sideways overnight. Then the market opened over here, and we had this big massive spike, which has obviously formed this supply area. And I put the supply area here just so that I can make a point about this rejection. Although that rejection actually happened at the moving average itself, um, which I thought was interesting. But also the fact that we pegged this line, because we started here and went all the way down here. This is a bullish sign because we have a parabolic wedge back to the moving average and then sold off from it. So probably even going to get another leg 1, pull back 2, pull back 3, maybe third leg will come through, which is what I'm expecting on Monday or Tuesday. Monday's a half day of trading, so we may not actually just get a very small range here. But anyway, so yeah, so looking at that, I've actually drawn the lines in already. This was the previous day, and as you can see, we carried on, formed this wedge bottom here. We could probably buy this high. It's actually a credible buy, risking how many points now? If we measure it, it's quite a lot of points actually. I think that's like 13 points. Okay, risking 13 points, just going all the way up to test the high of this range. That would have been a really good trade for the first trade of the day. 13 points. If say I'm going to risk $500, can't really work it out right now. On the ES, that is, well, 10 points is what's it called? Is one contract for 500. So 13 is probably slightly. You probably want to trade for less than that. Maybe 8 micros might be suitable for that. I mean, my first trade, I normally don't try to do too much, so I'll probably do 250 for my first trade. In which case, I would just probably make $250 as a one-to-one trade. I tend to go for one-to-ones because I have an 80% win rate, 88% win rate on those based on back testing. Which is weird because actually, when you think about it, and then my 2-to-1 is 57 or 50, between 50 and 57. But what's interesting is when you actually put them into the spreadsheets, you actually make more money with the 2-to-1s, and that makes sense because you need at least 40% to be profitable, and if you're a bit above 40%, you're actually doing really well. All right, so we do that. We have a parabolic wedge here, 3 highs, maybe not so much this, but it's a double top testing the high of the range. You can call it a wedge if you want. It's a third attempt to go higher. We can sell below this bar. Nice risk. Again, similar setup, aiming for the bottom of this range. This is something that I will miss, and I know I will miss it on the day. It's a spike, and I always have to remember that when you see this. But it's always difficult because you're thinking about the bottom of the range, and you have a 3 low parabolic wedge bottom here. Normally you have a pullback here and then down. But instead, what you actually had was a spike below the moving average. I always forget to look at the moving average, which is why I made it so thick. You have a spike down, and it failed. The reversal failed. And normally we have that reversal, we go for a measured move, which is why I have this measured move targeted here. You could always short below this bar. I don't know if I would be expecting this short, but the fact that it was failing would have probably just thought, actually, you know what, it's probably worth putting your short sell entry here, because we are now going to a spike pullback trend, which essentially is like spike pullback trend here. This is on a micro level, so this is the macro level. So big spike and 3 legs down. But on the bigger surface, this is 1, maybe this is 2, and maybe we'll have one more coming down. So 1, pullback, 2. Oh yes, we have one more coming down, which is why this is there. So it's like spike, pullback, 1, 2, and we're expecting one more down. Anyway, so what was now interesting was these. This was a bit tricky here. Did not consider this spike, as I should have, because obviously we've had this, didn't really have the spike. So we had this pullback, double top, 2-legged pullback here, credible sell, wedge top. Similar thing, 1, 2, and 3. Not really a high per se, but you could, if you wanted to, because I noticed that's coming down, testing the moving average. Nice selling here, really good risk reward. And because you're going to challenge this low, you probably want to go for 2 for 1. Alright, so the next thing, same thing over here, very simple. So you had 2 rejections of the moving average here, and then micro channel, and then look at that, this. I actually tried to go long here, and this failed, because I thought this would be the wedge, but just never considered that this would happen. I would have a nested wedge in here. I think in future what I will do actually is probably just wait for this bar to print a big massive bull bar, and then just buy above it if we go above it, which is this one. The risk is here, but it's a bull breakout, so chances are we're going to go higher if it works. If it doesn't work, you just get out. And this worked out beautifully. In fact, I actually thought this was the 1, 2, 3, this was the wedge, and then it failed. But actually, this was the this is the first pullback. This whole thing is the first leg. First pullback, second pullback, and third. The second one had a really deep retracement, so the second leg too had a bigger one, but this ensured we had a bigger leg up, another leg up, up here, but more so because you're rejecting this area, this moving average. So having this panel here is actually very useful, I'm finding. I also plotted this demand area from here, and I just realized that actually this was actually a really good, this could have been a good long all the way from here. Never really considered it. Could have gone long above this for 1-to-1, would have been a good trade. Here, good shorts, stop there, 1-to-2 if you want, because you had a nice sell-off. Chances are we're coming there. We're in a trading range now. There's so many opportunities, so many opportunities to trade today, and I only just saw them towards the end. Wasn't concentrating. That is the next thing I need to work on. So it's just the trades and concentration, really good concentration. I realized that if I had just traded a small size, not even on the ES, could have just used the micros, I would have made a lot more money than I made on the ES as I did, because there was a lot more. I'd be a lot more comfortable in what I'm doing. All right, so that's that. I mean, it's the same thing on the NQ. I don't know why my NQ always freezes, but it's the same thing on the, maybe because of all the lines, but it's the same thing on the NQ, same sort of pattern, same. Although this low was a bit different, and then you had this big massive spike, so this seemed to go for a measured move down, and then you had the micro wedge, 1, 2, 3, wait, hang on, 1 pullback, 2, you never really got a third pullback, did you? No, never really happened. So it's, NQ is always very weird sometimes, because you see 1 pullback, 2 pullback, 3. Oh right, so it's a proper wedge. So the actual wedge itself is this 1 pullback. So this, and this. 6. So this is a really credible long. I now remember what happened. So I could take this 1, pull back 2, pull back 3, pull back 4. Hang on, did I? No, I didn't count this right. This is not a pullback. I did the same thing I did in, yeah. This is 1, pullback 2, pullback 3. Yeah, all right, cool. So similar thing as with the ES, you have a very big wedge. And on the lower time frame, this is actually a wedge as well, but you have a triangle as well. So yeah. All right. So yeah. So that was trading today. The next thing I've been doing is just kind of trying to get a good sense of this chart versus, and this is the 1 hour chart, but I'm also looking at the 5 minute RTH chart and comparing that to the one with sorry, this is the RTH, comparing it with the ETH. And I'm learning that, for instance, now this day, and I remember trading this day, was very confusing. I mean, we had the wedge top here, it would have been made a good short, but I realized that it's easier to understand what the market is doing, because now this is the open here, but you can see we have a parabolic wedge here, 1, 2, 3. Before this wedge actually forms, you're here, trading ranges form wedges, and this would have been a really good short, obviously, but you can see how we got there in the first place. This is very risky to take along because you don't know how far we're going to go, but we actually get the nice setup there anyway, which we see clearly here. Oh, excuse me. But yeah, I remember this day, this wick, this was very tough. Yeah, this movement here was a lot, and then just seeing this as well. This is brilliant actually. The risk is, I mean, I think this is like 20 points or something, and therefore you would have had to use micros to trade that, because I will not put my minis on this one. Anyway, we had a triangle, sort of wedge, trading range, and then a bear breakout. Same thing here, triangle, bear breakout, and this too would have been great. Pull back to the moving average. Whenever you have this and you're just selling off like this one's always going to be minor. They gotta pull back to where we expect to sell. You can sell that bear bar, or if you want, high probability sell the second one, and then just keep going down for your 1-to-1 or 2-to-1, whatever works best. And then now we have a micro wedge, 1, 2, 3. So it's a spike, pullback, and channel. It's actually first pullback, but micro wedge here, 1, 2, 3, and it fails. So we go lower, and I'm trying to see. Oh yeah. Well, it says it is a trading range. So 1, 2, and 3. All right. That is, yeah, that's all I have to record for trading today. We'll see what happens Monday/Tuesday.